Hello traders and investors, I'm LA Little. This is your daily NeoTA wrap. Take a look at these markets from a neoclassical perspective, looking at supply and demand on the charts, asking ourselves, what does it tell us? Where are the tests? How do they test? What's the trend? What's the timing? Those are the things you have to know. You have to know the probabilities to make good trades. Do a show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel LA Little. If you want to subscribe and you haven't, reach up in the right-hand corner and do so anytime I push public content. You'll get a notification. As far as these markets and what they're doing, they're going up. It was another day of up, and actually, if you look at it from the perspective of what was needed by the bulls, is you needed the NASDAQ and you needed the NDX, right, to push higher. And that's exactly what you got. You got 0.75% off of both of those. Tacked on 0.6 here on the S&P. Dow was up over 1%, and the Russell almost 1%. Bonds down, gold down, silver down. Oil was up today slightly, and the dollar sold back down, and we'll talk about it a little bit later. So essentially, you got what you needed, and the reason I say that is because if I pull up the chart here on the S&P, or actually we'll start with the NDX, what you want to see when you get a breakout is you want to see extension. And the reason you want extension is because when it does roll back over, right, you want some air between you and whatever it is you're coming back to test. This is a wide price spread bar. If you come back within 6 bars, you can expect the bottom third of it to be tested. The farther you go up, the less probable it is that it will break it on the way back. And so it increases your probabilities that it will hold and try to go back the other way. And so that extension today is what you saw. I'll be the first to tell you, I didn't expect it to happen, but it did. And you can't argue with the markets. When the markets do what the markets do, you simply have to adjust and go with them if you're not trading in that vein already. So you got the extension on the NDX. You've got the extension on the NASDAQ. Both of those gave you exactly what you needed. What you didn't need, or what you didn't get, but you would have liked to have seen, was the breakout on the other indexes. Here's the Russell. The Russell test into the top has a little bit less volume on that test, and so you can see just slightly less volume. That is after a direct push up, and we're talking about a big push, 1345 to 1419. You push about 70 points there, and that's a fairly significant number, 5%, right? So a 5% straight up move. Now you run into resistance. This is probably going to pull back as a result of it tomorrow. If you look at the not the NASDAQ, but the S&P 500, you got the same scenario there. You actually did what you had to do, which I didn't think it could do, but it did it. It got over the breakdown bar's top, and that says it's going to go attack this one before it's over. And so should you expect some sort of a pullback? This chart doesn't tell you that. The Russell tells you that. We'll see if we get the pullback tomorrow. I wouldn't be surprised to see it just come back in slightly, and then they try to juice it again. And so that's the indexes. And the reason I say that to some extent is now you're starting to see the sector start to cook as well. We already knew the XLK was moving. The XLK got the breakout yesterday, got the extension today. That's what you want to see. Basic materials did the breakout today. I didn't expect it, but you see the volume come in, they get the breakout. Consumer discretionary, another large holding like the XLK, gets the extension today. That was a dark bar yesterday, didn't look that good last night, but this morning they push it higher. Those are the main ones. The ones that didn't do what you wanted to see them do was the financials. Didn't get over this breakdown bar's high and that swing point high's high. So that says, okay, that's one of the major groups. That one can't get higher right now. Test on a little bit less volume as well. That looks like a failure, test failure tonight. Elsewhere, here's another one that really did well today, was the SOX. The SOX is pushing up against the highs. So it's made its move. It's right up there. It's going to test the highs tomorrow. And so all of these over the indexes in the sectors, let me look at that, 137.89. Yeah, it didn't quite get to the top. That one will probably test the top tomorrow. So you're getting the kind of push that you need to continue this move higher. And I'll be the first to tell you, and as you know, I was leaning towards the ideal that this would be nothing more than a range expansion, and it would fail at the top. Still could, but the odds are increasing now, given what I said right off the top on the NDX, that this is actually going to hold on the retrace and push again. And so that says that even if it is a range, they're going to contest the top a couple times most likely and try to break it out. I had a question today about the dollar, so let's pop over and take a look at that on the currency. Actually, before we do that, let's pop into the gold stocks. Gold stocks, so you had earnings come out on ABX and Newmont last night. The gold stocks sold off hard with volume. They're back into the big bar. When you get this deep into the big bar, you've got to expect it's going to try to get to the bottom of it before it's over. And so, I had a question today from one of the members about buying this. You don't want to buy this unless you're flipping, quickly intraday stuff. You want to try to wait and let it get closer to the bottom before you take your shot at it. So that's the gold stocks. And actually, if you look at gold now, gold's a little different. It's unlike the stocks. This is just the metal itself. The metal has an ABCD structure to the downside that it actually completed today. Broke off, right, came down, finished it off, and got into the bullish retest regenerate off the bars that were more than 6 bars. That says this should get bought at least for a bounce and then potentially another leg down, or maybe it's a move back the other way. So gold stocks taking the brunt of it today, but the gold is not telling you the same thing. Moving over to the dollar, let's go to the currencies. Moving over to the dollar. Now, the dollar has been under pressure since the French vote. That was the gap down yesterday. Continuation today. Gets under a swing point low and breaks it today. That's on the daily. Now, this is a fairly large ABCD structure to the downside. Let's see if we can measure it out. It goes to there, actually. Gets the bounce back to here. And then the completion. Actually, it's pretty much a completion already, given the way it's set up. The only problem with it is you're using a proxy, and it's harder to read these than if you're actually looking at Forex. So, from that perspective, hey, maybe it's done. Let's look at it in other ways, though. First of all, let's go to the weekly. The weekly has a swing point low here, 25.65, well under it now, 25.50. It's going to have to get a pretty good bounce to save that by the end of the week. Is it possible? Sure. Is it likely? I don't know. It's kind of a toss-up at this point. Looks to me like eventually this is going to head down into these bullish retest regenerates. And that area there has been tested once, so this would be the second occurrence. So in other words, your probabilities now are getting into a coin flip area on the trip back down. And finally, if I bring over the monthly chart and look at it, on the monthly chart, it's a huge consolidation range. And that range has been in effect for quite a while now, right? We're talking about, what, 3 years, 2.5 years? And so the fact that you can't hold the top says that you're going to try to get into this middle part. And that's where all the, the volumes really, are coagulated, if you want to call it that. And that area there is right at the 25 level. So if we go back now to the weekly, if we get under or into those swing point highs, if they come down towards the bottom of them, which they should, that will be the 25 area. That's probably where this is trying to go. Moving over to the European currency. Now recognize the ECB has a meeting on Thursday. And so, depending on what they say, that could change things. But here, you have a huge move to the upside, much more than what you're seeing over on the dollar, because the dollar is strong against the yen as well. And so the dollar's picking up points there, losing them here against the euro. So the euro gets over a swing point high, has the volume, looks as if it's going to try and continue. That's up about 105, almost 106. If we pull it to the weekly, it is back into this big breakdown bar. Swing point low is over here at 106.79. This looks like it's going to at least tag that area. And so for anywhere from 107.60 down to 106, what did I say that low was? 106.79 looks to be where this is trying to go. Looking at the Japanese currency. Now remember, the Japanese currency was moving higher. It has started to sell off against the dollar. That, of course, is a risk-on trade. We've talked about that. They arrested this short of the ABCD structure. Now they're back into the support zone. I would think this probably levels out a little bit in here somewhere as it comes back in to test these regenerates that are bullish. And so all in all, what you have is a total risk-on situation where all of a sudden everything that was bad is now good. Your dollar flips around. Your gold flips around, your bonds flip around. Matter of fact, we can pull the bonds up, and then everything's risk on with the assets. And can they continue? Yeah, it's possible. Can they make another leg higher? I still don't think that's the case, but I'm not going to argue with the market. One thing I've learned over the years, you don't argue with what you see on the charts. You simply try to take advantage of what they're giving you or what they're taking away. And in this case, what they're giving you is a market that does want to move higher or at least continue to test higher over the next few sessions at a minimum. And so that's where we're at tonight. I'm going to leave it at that. Have yourself a great one. Thanks for joining me. Take care, and I'll see you next time.